When you're tracking the overall market, such as an index or even an individual stock, it's always good to have a different perspective. Let's take a look. For me, that different perspective is taking a look at the CBOE volatility index, the VIX or the fear factor. We talked about this a number of times, so you can go back and check out some of those videos. But what I'm looking at is the volatility index seems to climb at the time that the markets take a fall. And then when the VIX declines, the markets head up. So right now we can see that there was a bottom here in late 2017, and then all of a sudden we had an eruption in the VIX, and that's when we had the February 2018 decline, and then we had another eruption in the VIX in late 2018, and it's still elevated in early 2019. And so that was the problems that we had in the market in late 2018. So looking at the VIX, I want to see what it's doing because that maybe is going to tell me what's going to happen in the market. And I'm looking at the 10-year because I want to do a little bit of comparison with this time frame here, say from 2014 into say 2016, maybe even late 2016. So where we find ourselves right now is elevated at this level here. The current measure is 17.42. So we had this initial eruption right there. It calmed down here and then another eruption here. If we go back to 2015 to say 2016, we see somewhat similar an eruption there and then a secondary one at this point. So we've moved through the primary and secondary eruptions, and we had a tertiary eruption at this point and maybe even another one here. So that's what I'm expecting is a tertiary sort of eruption in the VIX, which would cause a correction in the stock market. So let's move down here a little bit. I'm not sure if I'm going to be able to see both of these charts at the same time, but you can get the idea. At this point here, which was in, say, late 2015, was the initial larger eruption. Then we had the secondary, and the tertiaries came here when the fast line was under the slow line. So this was the major move, the biggest move recently in early 2018 at that point. And then we had the secondary one here at late 2018. We have not gone through, the fast line has not gone through the slow line, so there's still a pretty good potential for another eruption, being that we're still on the upside of that slow line. These tertiary ones again occurred when the fast line went through the slow line, so it can happen in either location, either below or above, but the probabilities are better when you're above. So I still think that the probabilities of a tertiary sort of eruption of the VIX while the fast line is above the slow line, those probabilities are still high. So that's what I'm waiting for. I'm looking for that because when that tertiary eruption occurs, we're going to have that correction in the stock market that I'm looking for. So now let's change the time frame to the daily on the VIX. So now this is the 1-year daily chart on the VIX. Going back here to February, we see that we had that big move there. After that, the VIX did calm down and allowed the stock market to rise. We had a small eruption there. Things calmed down. Another little eruption here. And then this is where the market finally was able to calm down and make some headway into the summer. Now, we had a little bit of eruption here in October, November timeframe. You remember that most recently in late December, and that's what we're dealing with right now, is the VIX did calm down here. So we've had a rise in the market, but I'm waiting for another tertiary eruption in the VIX, and that's going to give us that correction in the market to where I'll then have the confidence to go in because I think the overall VIX is calming down and it's going to continue to calm down, which means that the market's going to rise. So where we are at this point to me, in my opinion, is similar to, say, this level there, perhaps even this level here. And we had an eruption that followed both of these time frames relatively shortly thereafter. So I'm waiting for that. Let's take a look at the MAC and you'll get a better idea too. Looking at the MAC, we had this move in late December that caused the downfall in the market. Now, the VIX has calmed down, but it's basing in this area here, somewhat similar to this base that you can see there. Very similar. So I'm just simply waiting for this move in the VIX up to that level there. That will hopefully be the correction in the market, and then things will calm down. Now, we're not too far away. We're, say, a week or two, but I still want to see what this fast line does. I want it to move through the slow line and have this type of a move in this area here, which will be hopefully a successful test of the market lows. Again, this is the inverse of the market. So wait for that test of the lows before you go in and buy any stocks. That's what I'm waiting for, and it just takes some time and patience. So sit back and continue to watch and subscribe. And for today, that's ChewDog Charts. Thank you.